Let's bring in our traders. We've got Thomas Hayes and Phil Flynn both joining us via Skype. Thomas, first to you, what do you think about this call on gold by Goldman Sachs?
Well, we're agnostic on gold, Cheryl. We think maybe it can go a little higher in the short term. But you have to keep in mind the major holders of gold are going to be the ones that need the most cash. So when you look at Russia with low oil prices, they're going to have to sell some of their reserves to pay for their programs. Italy is another major holder of gold. They're going to be needing some money for their spending programs. France, Germany. So maybe in the short term on the inflation expectation from all the quantitative easing, et cetera. But in the intermediate term, you have to think who are the buyers and who are the sellers. And those Federal Reserve banks in each of those countries are going to need to raise cash. So we like, generally, we like high quality businesses because they produce something. And many of these companies have gone on sale, as you know, in the last handful of weeks. And some of the highest quality companies are selling at 50% off. Now, does that mean they can't go lower? Of course they can go lower because the economic news is going to get worse in the short term, that's for sure. But the market has also discounted a lot of that bad news already. So for instance, if you had bought in October of 2008, okay, by March of 2009, you looked silly, you were wrong. But by June of 2009, you were a genius. So on red days, we're nibbling into the highest quality companies, like, for instance, Coca-Cola is down 40%, peak to trough. Their yield was 4.4%. Companies like JP Morgan, best in class, down 42% peak to trough, 4.3% yield, et cetera. So that's kind of where we're thinking about it slowly and cautiously. It's not the bottom. No one can pick the bottom. But if you can take a longer term view, there can be opportunity in coming days and weeks. And on green days, we just sit tight. We add on red days.
Okay. Well, I want to go back to the issue of gold and more importantly, Phil Flynn, the issue of copper, because that is actually a China story. And as we know, China is now getting back up and running. Supply chains, we've heard from several companies, are now actually, they're churning out, they're manufacturing again. But you say copper is a big piece of that. Why?
I really do, because copper has got absolutely crushed on the coronavirus because the demand destruction mainly coming out of China, the world's biggest consumer. But we saw today, along with the other metals, that market is coming back in a dramatic way. We're up over 10 cents today, and it could go a lot higher. Listen, there's going to be pent-up demand once the economy comes back, and that's going to be great for copper. And going back to gold, too, remember the power of quantitative easing on gold. The last time in 2008, gold hit a low, I think, of like 686. When the Fed started to do QE, we went up over $1,000 an ounce to 1,000. So I don't think you can underestimate the power of what happens with quantitative easing with that yellow metal.
Yeah, and the dollar story as well, which I know affects oil, which is, of course, your specialty, but the currencies, and of course, these commodities like gold and copper, it's silver as well, all go kind of hand in hand. And that's what Goldman Sachs says. They say buy gold. All right, guys, thank you very much. I appreciate it to both of you. Thomas Hayes, Phil Flynn, we'll see you soon.